Alright, hello guys. Back with another Whale and Wolf collab video, which we do fortnightly now, by the way. Isn't that right, Whale? Every Tuesday?
Every Tuesday, guys. So obviously this week we had to push it back a little bit because I was a little sick. But yeah, every fortnight.
Every second Tuesday, we should say. This is obviously Thursday again. Pushed it back a little bit this week. That's what you can expect from now on. And obviously now we are in a bit of a boring state in the market, in which we've been going sideways for about 14 to 15 days in this same 28k to 31k region. And I'll get Well to just go ahead and start it off and just talk about that short term before we get into the longer term predictions.
Sounds good, Wolf. Yeah, look, I've been falling asleep looking at this market for the last 20 days, but I don't know about you, but it has been boring. I'm not going to lie. And I think sitting here saying this has been an exciting time in the market, you're just lying. Like, it just straight up, it's just boring. And, you know, the market isn't always exciting. I remember back in 2018, pre-bull market, it was boring for 2 years. You know, we saw, you know, people would get excited when we saw like a 3% pump. You know, that's the extent these markets can get to, but we're not nearly there yet. You know, we're only in here for about 20 days, pushing sideways into consolidation. We have this nice consolidation pattern occurring, which is what we call a pennant formation. And we do know that we have entered this pennant from the top side. And when we enter from the top side, we generally follow that trend to a downside. Not always, but it does generally occur more often than not. We do have to be aware that upside breakout is possible. We do have a major resistance zone occurring between that $31,000 to $32,000 zone. We will come back and talk about that zone. I think I'll briefly touch on that later on in the video. I know Wolf is going to talk about more about what we actually need to see happen on the macro time frame to flip bullish. I'm going to go ahead and talk about what we need to see happen now. I'll talk about what we need to see actually need to happen on the shorter term time frame to flip bullish. I want to show you a few charts, but I do want to come back and talk about, you know, how low can we go from this pennant. And if we go ahead and take a look from a market analysis point of view rather from a technical point of view, if we just do a quick measured move of this pennant, we can see from the breakout point we'd enter anywhere, you know, breaking down from about this point onwards, we'd reach around 25k, which is this downward trending support line. Now the reason I say we won't go lower than that from this initial break, even though the measured move targets here, we generally go until we find support and then we kind of consolidate and either continue downwards or bounce upwards. So I think the first target, if we do break down from here, would be that support line. Now, we have had a lot of failed breakdowns, and I think a lot of people have been caught off guard because we see these breakouts over here and people, oh, yep, this is where we're going to turn down, this is where we're heading down, but then it just shoots back up. And like I said many times, this gray zone here, if we zoom out, this gray zone is the 30k support zone. And this is the 500-day low, essentially. This is a very strong, very strong support zone. And I did mention how it was going to be aggressively defended, and we have been seeing that. If we draw a horizontal ray from here, we can see this low is being aggressively defended on the larger time frame. And until we get that daily close, I think Wolf talked a lot about 28,500, I think.
Yeah, roughly, yeah.
I think Wolf talked about that. Yep, if we break a daily candle below there and close, that would be confirmation of a breakdown over here, and we'd be heading lower to this support line over here, or we could take a little bit longer to head down and reach this 24k level once again.
Correct.
As for the upward movement, Wolf, I'll just briefly touch on that, and then I guess I'll give you the floor to talk about what you want to talk about. This is another chart I love to use, and this is a chart I've been using as my primary Bitcoin chart lately, only because our recent market pattern, which was this ascending channel, has kind of completed now. We've kind of reached the target from that. We don't really need to be referring to that much anymore. So I've been utilizing this chart here as my primary chart, and I have a few annotations on this chart, including you can see the Fed hike with these dotted lines, the 37k resistance, major resistance zone, which is this zone over here. And we'll just go through it. So we have these two declining trend lines. We have the black solid lines, and this is representing a descending channel. And then we have these two declining dotted trend lines, diagonal trend lines, which are representing, again, an overlaid descending channel. And we can see that this overlay has been deviating from the base channel over a period of time. So we have this increase in thickness or gap between our major structural resistance and our overlay resistance. And what does that mean? Well, it means we have this aggressive downwards consolidation pattern, and it's becoming more aggressive as we actually trend downwards. We have this tighter range of consolidation, with a greater range of taking profit or entry points. So this is our entry points down over here, and this is our profit taking points over here. What does it tell us? Well, it tells us similar to what we saw. If I go ahead and remind you, in our last video, we talked a lot about, and this is our last collab, we talked a lot about horizontal and diagonal resistance ranges. And if we take a look at this gray box is essentially what we see on this diagonal scale over here. And if we go ahead and relate that to this chart over here, it's the same thing. We see this diagonal resistance range, which is expanding over a period of time. So all of this telling us is saying that if the price re-enters this range here, we can expect major resistance, because we have this major resistance zone between these two lines, with that 37K resistance. And if we enter this range here, we find major support. We're going to come back and talk about that later. But we have that pennant formation pushing upwards. We have major resistance at that 30,200 level. We zoom in, we can see where that actually is, which is this uptrending line here. So we are in fact actually below this uptrending support line. Basically has held support throughout the entirety of the bull market. We are in fact below that. We are below the $32,000 major resistance, and we are below a lot of other resistance ranges. So coming to talk about where we can see the price going on the short term, if we see the price push out of this pennant, it would result in a push above this resistance range, and we would need to break above $32,000 to flip that short-term trend, pushing us up into this resistance range here, or into this resistance range in here before even getting rejecting or breaking out. A breakout of this resistance range, this diagonal trend line, could flip the trend on the short term, but I think we would need to break $37,000 to have a shot at that long-term resistance, which Wolf will come back and talk about, which is this upper resistance and this high over here. Wolf, I think I'll pass it over to you, mate. What are you going to talk about next?
Well, I want to talk about the volume profile, and I'll share my screen to talk about this. Let me just get it up right now. And it kind of goes into what you were saying before about 32K. Now, let me just actually clean up the chart. I'm just going to delete everything from this chart right now. And what we can bring up is this volume profile on the side. For those of you who don't know what the volume profile is, it's essentially, so volume is vertical on the bottom of the screen, and it measures volume per candle. The volume profile is measuring historical trading volume as per a price region. So you're looking at like a specific price point and how much historical trading volumes happened on that specific price point. And generally speaking, when you're below that price point, it acts as resistance. And when you're above it, it acts as support. And what we're seeing actually in that 32K to 33K area, like you just mentioned, not only is that like the critical break of the short term or where we need to go to in the short term or resistance, it's also on the volume profile proven to be that point. This is acting as validation for what you just said, essentially. What you can see is that right now, Bitcoin is wedged between, I would say 28.6K roughly, let's just draw it in roughly, which is where the lows have been seen, obviously, during these two periods here, and also right now. And that bit of that spike on the volume profile between 33 and 32K that you were talking about in a different kind of manner before, right? So that's kind of my justification to a certain extent for this consolidation region on this major support zone. We're not only consolidating on this major support, we're also seeing the price just kind of lodged in there with no clear resolution at this point. And I think if you go to the regular volume, you can kind of see that playing out. What we're seeing right now is actually relatively high volume. Volume doesn't mean much, by itself, but volume trends means a lot. But right now we are seeing relatively high volume, comparing it to what we saw throughout January all the way through to April. And that's kind of demonstrating that, hey, there actually is a lot of attention in the market right now. A lot of people are buying and selling rapidly because they're trying to catch the next move. However, there's no decisive winner in that buying or selling, which is why the prices are moving, obviously. And so, that volume profile is an explanation for that. But I do want to move on now that we've kind of covered what's going on with short term and what the critical regions are. So I would say the critical region is between top side 32 to 33K, bottom side 28.6K. I think, would you agree with that?
Yeah, I think that sums up basically what I was talking about as well, that those two ranges.
Yep. So those two ranges are definitely what you need to be watching in the short term. Chuck some alerts on TradingView on those two ranges, maybe 32, 33, and then 28.6. And wherever we go from there, with confirmed, probably daily candle closes, that's probably the direction in which we're going to be heading in the short term, I would say at least. Now, I do want to just flip over to the 4-year cycle, talk about it quite a lot. Everyone's very familiar with it by now. But I also want to talk about it for another reason, and that is what we need to be seeing to flip bullish. But before we even do that, let's just go ahead and say what it is. Well, 4-year cycle is based on the halving. So the halving happens every 4 years, and essentially that's when halving rewards kind of half. Okay, so it's triggered, it kind of triggers a 4-year cycle on Bitcoin, which you see 1 year of intense bull market, 1 year of intense downwards bear market, and then 2 years of accumulation, right? And we've seen that play out basically 2 full separate occurrences, but we're going on 3 separate occurrences now. So it is an established trend at this point. And we can see date range trends playing out with this as well. All of those date range trends pointing to, according to the 4-year cycle, an estimated bottom in November. That doesn't mean it needs to happen in November. It means the estimated bottom, give or take a couple of months, or maybe even a few months, to be honest, because it's a very rough trend, is November. And then we have to think, okay, so the date range is roughly towards the end of this year, maybe the middle to end of this year. Where's the price? Where's the price going to be? And I think me and Whale, myself and Whale, kind of do have similar opinions on this. Now, we do both agree that it is possible that Bitcoin can go down to 12 to 14K, but we do think that due to the current trend, the 4-year cycle, the most likely bottom is going to be, or the first possible bottom, we should say, is going to be at the 200-week SMA. Now, why is that? It's because Bitcoin's never closed a weekly candle below the 200-week SMA. And so we've seen 15 months of accumulative price action in that region, on that support region, and we've never closed a single weekly candle below it. So as you guys would know, one of the number one rules in investing, basically, is invest with the trend until it ends. And the trend of holding the 200-week SMA is not ended yet, and so we have to assume it will hold at this point, or we have to at least think it will go there at this point. And so based on that, invest with the trend until it ends. If we go ahead and flip over the chart, what we can see is that in order to be, actually, let's flip it back over and then we'll talk about that in a second. In order to be bullish again on the market, right, what we need to be seeing is actually a break of this trend. And so right now the trend is every time we lose the 50-week SMA, we end up at 200, right? On all of the occasions, I'm circling them now. We lose the 50-week, we end up at 200. We've lost the 50-week again. We have to assume we're going to end up at 200 until we don't. So for me personally, in order to be bullish on the market, we need to break back above the 50-week SMA, which is conveniently right now at where the previous high was at around 47K or 46K, right? So break above the 50-week SMA, in my opinion, that would make me bullish in the market again in terms of the macro. I'll flip the screen back over to you, and I think you can tell us whether you agree with me on that or not.
Yeah, sounds good. Wolf, I'll go ahead and share my chart because I have, like you said, we've got very similar opinions. Well, I guess over time we've drifted a tiny bit, but we still share the same base, I guess, prediction which we created way back in November, which is 24K 200 SMA. But I would say I'm leaning more out of that 12K prediction the longer I've been looking at it. Well, not even prediction, assumption. I would say we never really said that we're going to see 12K. We just said it's a possibility based off a measured move. But I've been looking at this chart a lot more lately, and I've been really liking this chart because it's predicted basically about a 12-year period, or even I think 11-year period of Bitcoin's price action, and we can really break it up into different sections. So we have, it's kind of like what you said with that 4-year cycle. We have these different sections. At the below top section, we can see 3 distinctive below tops. We can see bear market rejections. This is where a bear market starts, where we break down below this midline, this trend line, come back up, reject from that bull market resistance, which I like to call it, and then we head down to this lower support. Either we come down to that lower trend line, or we retest that 200-day moving average, which I'm going to go and bring up. You can see over here. Again, we reject, we push upwards, we reject, we come on down. Again, retesting, but eventually coming down to this this bottom trend line. And again, one more time, pushing up, rejecting, pushing down, and maybe hopefully coming down to its bottom trend line. So I guess I've gone ahead and labeled a few things in here. First, we can see our solid bottom line, which is bottom number 2, and our dotted line, which is bottom number 1. The dotted line acting as the main support, which you will see if we come down and retest that 200-day moving average, is more likely to be around that level. So I guess where I'm going with this, I'm going with a lot of questions people ask is, what would happen if we break below the 200-day moving average? Where could we go? And I think this is kind of the scope that I like to answer that question from. Taking a look at this chart, we could see a potential low of around $18,000 based on the chart. And I think Wolf has mentioned already, just because we reached a 200 moving average at 24K, it doesn't mean we're going to bottom out directly there. We can actually see a period of price action drop below and then bounce back up. But like you said, we need that weekly close above that 200-day moving average, which is kind of that confirmation of bottom. So we could come down, we could break this solid trend line, head down to 18K, push back up and weekly close above the 200-day moving average, and then continue in an uptrend. I would like to say that the trigger for the breakdown will be losing this dotted line, which is sitting around $26,000 at the moment. If we go ahead and look at the normal Bitcoin chart, $26,000 is sitting around this level, which is basically taking out the lows of the first initial push up on Bitcoin, which is around 26,600, around this level here. So if we lose this level over here, we can expect pushes down to 18,000. 18,000 on the Bitcoin chart is sitting, let's go ahead and pop it in, around this level over here. So this whole gap over here would probably be closed if we push below that 26,600 range. I also want to pinpoint that we do have the Gaussian channel on this chart. We can see that the midline is acting as a major resistance, and we can see that every single time we kind of cross over that midline, we have a rotation in the trend or a flip in that trend back upwards. And we can expect that midline to be acting as a major resistance, and that's kind of confirming what Wolf went over, which is that 50 SMA is kind of lining up. The 50 SMA, the midline of the Gaussian channel on the weekly, and the 200, as well as that local high that we saw in March, all lining up around 46K. Wolf, I think I'll throw it back to you. Do you want to add anything to that?
No, I think that's all good. I definitely agree with a lot of that. Now, what I would say though is that you said that, for example, we could see a bottom of a 200-week SMA and an intense wick downwards towards something, for example, like 18K, which definitely could happen. I do want to also point out the fact that it is obviously a possibility that we do just drop below 200 in general and close weekly candles below it. And the justification for that obviously would be, well, it's deviating from a trend because of something like a recession. Obviously a possibility, very speculative to talk about, because again, we do need to be investing with the trend until it ends. But yeah, there is a recession going on, and that is unique, and hence there could be unique price action, like a drop below 200-week SMA because of that.
100%. I think I'll just inject one more thing into there. I guess another question we could ask, or thing that we could say, is like, what happens if we lose this solid trend line? Because you can see the solid trend line has held a support since 2013. I think Wolf just kind of put a little bit of information in there which could indicate what would happen, which is that recession. And if that occurs, we could potentially see a drop below this solid trend line. And it's really hard to tell you guys what would happen next, because this is a 13-year long trend, and basically the entirety of Bitcoin's price action has happened within this market pattern. And I think if we do drop below this trend line, I think 12K would be that next target, I believe.
Yeah,
agree with that?
It's important to note as well. It's important to note as well that eventually that trend line will need to be lost, because this is a logarithmic chart, and so it's simply unsustainable for Bitcoin to keep up with that chart forever. And so maybe, just maybe, this is the right time for that to happen during a recession.
Correct. I guess one more thing before we move on, a lot of people would ask is, how should I be acting? And I think we got, maybe this is a community question in the video, maybe it's not, but I'm going to answer it now anyway. What should you do now? Should you buy now, or should you wait for this bottom? And I think the best thing to do right now, guys, is to wait for a short-term trend to play out, this pennant formation, see what occurs. If we close below that 28,500, I think it's a confirmation that we're going to be hitting lower. I think that 26K dotted line support, you could probably look for some entries over here, but again, just see what happens, because we could definitely come down to this 24K region again on this 200 moving average. And I think if we lose that, I'd be definitely personally aggressively buying in this gray box. I don't care what happens. I'll be aggressively buying in this gray box, because according to 13 years of historical price action, that would be an absolute low, If it drops below that, well, then we just have to adjust our entries based on what's occurring. But I think, like Wolf said, you invest with the trend, and a 13-year trend is a pretty significant trend. Wolf, I'll hand it over to you.
Sure. All right. So what I want to talk about now is altcoins and the altcoin market. And a lot of people would say, well, now that altcoins are down 80% or whatever, 85%, is it time to buy altcoins during the dip? Now, I think you guys would know my opinion on this at this point in time already, but I would say no, it's not the time to do that. There's many reasons for it. One of which being, if you're buying altcoins now, you're not going to be able to buy them or you're going to be able to buy significantly less during, for example, the Bitcoin bottom or the halving. And by that time, which is like 3 years away, 2.5 years away, the halving I'm talking about, there could be significant developments in the altcoin space, and you could miss out on some of those technological advancements because you've already got your bags full, right? So no, I wouldn't recommend buying altcoins right now. And also, I don't think the bottom's in, so it's just a terrible idea in general. But another reason why that shouldn't be the case, why you shouldn't be buying altcoins for the long term right now, you can trade them for the long term right now, is because Bitcoin dominance has just made basically its first macro moves to the upside. After triple bottoming on support, it's seen a breakout of some sort of wedge structure to the upside. And generally speaking, when Bitcoin dominance goes up, it's indicative of a bear market intensifying and of dominance in the market, obviously, shifting from altcoins towards Bitcoin. And when you see dominance shift towards altcoins, shift towards Bitcoin from altcoins, you generally see the vast majority of altcoins die out. And we saw that in 2018. And to prove this, I've got a snapshot of CoinMarketCap from 2018. This is the exact day, or the exact week, I should say, of the entire market's top in terms of market cap in 2018. Now, Bitcoin topped out at a different time than altcoins did, and so this is from the altcoin top. Now, what you'll notice is that a lot of these altcoins are very familiar, right? In the top 50, you've got a lot of familiar altcoins. When you move downwards further and further, and these are very popular altcoins down here from 2018, you've got coins like Redcoin, you've got coins like PAP Global, Salt, Funfair, Nexus, PivX, I don't even know what that is, Factum, Aon, you get the point. A lot of these coins are not even recognizable in the slightest. And as you move further and further down, you get that more and more, right? Why are these coins not recognizable? Because they've died out. They've died out during the last bear market we previously saw. And again, we saw the same thing in 2014 to I guess 2016 bear market, right? There wasn't many altcoins back then, and altcoins weren't of particular popularity. However, we did see the same thing, which was many altcoins that came on the market, a flood of altcoins, and the vast majority of them died out. Now, this is even looking at the best case scenario. We're in the top 100. So these are the most popular altcoins. And obviously, as you move further and further down, it just becomes absolutely, absurd. How many of these altcoins here, for anyone who's come in the market from basically 2020 onwards, do you guys actually recognize? And this is top 150. These are pretty popular altcoins for 2018. And I suppose the point is, something like this is, I'd say, almost certainly destined to happen, in which we see the vast majority of the altcoins, particularly outside of the top 50, die out. And the sad reality is a lot of these altcoins, not all of them obviously, but a lot of these altcoins actually probably had decent fundamentals, right? Not all of these altcoins died out because they're all scam coins, they all got rug pulled, right? Even altcoins with good fundamentals die out. And why is that? Well, it's because marketing, generally speaking, can be seen as more important than fundamentals. And it's very, very hard to market a coin correctly when the entire cryptocurrency market cap is down 80%. And so I would say that now is certainly not time to be buying altcoins for the long term. And I would even argue that you shouldn't be buying altcoins for the long term until at least the Bitcoin bottom, but more preferably the halving, because that is when the bull market is triggered. And if you wait until the halving, you're saving yourself 2 years to kind of oversee the technological advancements in the cryptocurrency space, and you can make an informed opinion right before the bull market. That's my opinion on altcoins. And then I guess we can move on if you're ready, or you can bring something else up.
I think I just want to add into that statement. I think I completely agree with you, but I just want to make a quick distinction, which is we're talking more in regards to long-term investing. I think buying altcoins now to trade, just to clarify what Wolf said, buying altcoins to trade right now, perfectly fine. To scalp trade, perfectly fine. But Wolf is more talking about long-term investing. So.
Yes, that's correct. Trading is always fine because trading is based on technical analysis. Long-term investing is based more on speculation of how something's going to react to the long-term trends, which obviously is, a little bit less about TA and more about guessing to a certain extent.
Correct. Yeah.
So yeah, long-term.
One more thing, sorry. With the Bitcoin dominance increasing, like you said, we see an exacerbated effect on the decrease in asset price for altcoins if Bitcoin dominance is increasing while total cryptocurrency market cap is decreasing as well.
Yep.
Which is currently what we're seeing now, which is why we're seeing altcoins have suffered significant losses. Some are down like 90% from their all-time highs. I know you take a look at Gala, for example, I think it's down probably 89% or something from its all-time high, in comparison to Bitcoin being down I think 40% from its all-time high. maybe even what is it, Wolf? Maybe close to 90.
96, 95,
96.
yeah.
Yeah, and that's just because Bitcoin dominance is increasing while the total cryptocurrency market cap is decreasing. So not only is there less money in the market, and that's progressing, there's less and less money in the market, but Bitcoin is taking up more and more of the available supply, therefore essentially bleeding altcoins out. So what Wolf said, I totally agree.
It's a double negative. It's
double negative.
Yeah. All right, we'll move on here.
All right, so we're going to jump into some community questions next. We're going to head over to Twitter because we asked a bunch of people on Twitter what questions you want answered. Let's go ahead and see which one we're going to go take a look at once we bottom out. So quick return Bitcoin. I think we talked about this on a little bit already. When we bottom out on Bitcoin, we would see a quick return to the price of Bitcoin. Would it be like past recoveries that have taken 18 months? Or, yeah, well, essentially, Dave, I think it will not be a quick recovery in terms of a couple of weeks. I definitely don't think we'll see an 18-month sideways recovery. I think it will be a little bit quicker. But again, there's no point really talking about these scenarios just yet. I think I've really tried to stray away from answering these kind of questions. Not because they're bad questions. I just don't like to be talking that far in the future because we still have a few scenarios, a few events that need to actually occur before we even bottom out. And by the time we do bottom out, if we bottom out, provided we go down lower, we could be in an entirely different global economic environment. Bitcoin could be in a different environment. The charts could be looking a different way. There's a whole lot of factors that could actually affect the answer I give you now. So I think zoom out. Focus your view a little bit more to the next few months rather than 2 years from now and trying to predict that kind of stuff. Focus on what you're going to do in this current moment between the current price and where we think the price is headed to the bottom, how you're going to adapt your trading, your trading habits, maybe your rules that you're applying to your trading, or just your day-to-day decisions based on how much money you should be investing, or if you're even going to be trading right now. Those decisions are going to be more impactful to your portfolio rather than knowing if the price is going to bottom out for 18 months or shoot up directly. Wolf, would you quickly agree, just taking your opinion, would you agree on that? Focusing a little bit more to the present, more beneficial?
Yeah, for sure. Yeah, like you said, there's so much that can change between us answering this question now and when we bottom. We don't even really know, like for sure. Obviously, we don't know for sure. Nothing's certain, but we don't know whether it's going to be 24K bottom, 12K bottom, and obviously either of those, could change everything. So I think, generally speaking, if I was to answer your question very generally, provided it's not a black swan event, it should be months long of accumulation at the bottom. But that's just generally, right? So don't take that too seriously.
Yeah, and I think if we're just going generally speaking as well, we are quite long into this bear market cycle already. So I think you should keep that in mind too. If we're talking a 4-year cycle and talking, how long are these accumulation periods, we are quite long into this bear market drop. According to the charts that we are relying on, we are closer to the bottom than we are to the top of this previous high. All right, let's go ahead and quickly look at this one. Could this be some kind of falling wedge? No, it's definitely not a falling wedge because a falling wedge requires two diagonal trend lines which are coming together. All right, so they're converging, not parallel. This is more of a parallel descending channel. Incorrect market structure there. I answered this video already. We're not going to answer altcoin video. Maya asked from here, what would be the most appropriate direction for Bitcoin? Going up or going down 24K and 18K? If the later happens, will it consolidate for a long period of time? I think we just answered that for you already. We answered that last half of the question. And we talked about this during the video. So I think I'll hand it over to you to answer some questions as well.
Sure. All right. So I've only got one question, but I think it's a very good question. And I think a lot of people ask a question like this. So, okay, so in previous cycles, I'll just read out the question. If Bitcoin has corrected 80% in both 2018 and 2014, how come you aren't as confident we will go down 12 to 14K, which would be 80%? So essentially saying, if it's done 80% corrections from the bull market top before, so it did it in 2014 and it did it in 2018, why do you think it won't do 80% this time? And he's saying that because I'm assuming that we're probably going to bottom out of 200-week SMA, which would be a 68% drop if we bottomed out today. Obviously, it's moving upwards, so it'd be more like 65 or something. Now, okay, so this is a multi-layered question. Now, the reason why I don't think we're going to go down 80% like we've done in the last 2 cycles, reason one would be diminishing returns. Okay, so if we went down 80%, and by the way, I do cover this quite a bit. I do say there is a scenario in which we go down to 14K to 12K, which is based on the 80% drop as well, right? If we go down to 13K, 13.4K, that's an 80% drop, which would line up with 2014 and 2018. But the main reason why I'm not assuming we're going down 80% is because that's kind of just a coincidence, in my opinion, right? Just because we went down 80% 2 times in a row doesn't mean it's a trend. What is a trend at this point is the fact that we bottom out on the 200-week SMA. So I'm weighing up 2 things. I'm weighing up, hey, we've gone down 80% twice, possibly by coincidence, and hey, we've got a 15-month-long accumulation trend on the 200-week SMA, and I'm choosing the latter, right? So to me, the 200-week SMA is more important. But if we do see that scenario in which we drop down to 12 to 14K and we go down to 80%, then that 80% drop, will be a trend because it will happen on 3 separate occasions. But yeah, at this point, I think it would just be kind of random speculation to say it's going down to 80%. But what I would like to add as well is that a lot of people say things like, in relation to the bear market bottom, they'll say, okay, well, we saw a blow off top in 2014. We saw a blow off top in 2018. We didn't see a blow off top here. Again, I think we did see a blow off top here, but just acting under the assumption that, we didn't, right? Because obviously these blow off tops were, I don't know, they went up higher, right? If that's the logic you're using, then yes, okay, sure, right? Acting under the assumption we didn't see a blow off top here, then you would have to assume that the bottom will be different, right? And I would say that bottoming out on the 200-week SMA this time would be different because that's only a 65% drop, where in previous cycles we've seen an 80% drop. So I'm just putting that theory to rest. I've seen a lot of people on crypto Twitter talk about that. They're saying like, oh, well, if we didn't go up as much as last time, why would we go down as much as last time? Well, we're not going down as much as last time because we're going to 200-week SMA, which is a 65% drop. So I think, yeah, everything at this point is pointing towards a 200-week SMA as the minimum bottom on Bitcoin. And I don't think just because we've gone down 80% on 2 separate occurrences, that doesn't really mean we need to do it again. That could just be a coincidence. So that's my opinion on it. But yeah, I think that if we're done, have you answered all the questions you wanted to answer?
Wolf, I think I'd like to bring up a chart for that one. Do you mind disabling your screen sharing?
Yeah, go for it.
Just piggybacking off that same question is, like Wolf said, that, the 80% drop, if we just go ahead and take a look at this. So 80% drop, we had that, 83% drop over here, and we copy and paste that over. We had that 80% drop over here, yeah? 80% drop. If we go ahead and take a look from the blow off top over here, an 80% drop would actually bring us down to this red line over here. And this is kind of another thing Wolf was going off and what I'd like to say over here. If we saw 80% drop, we would break this 13-year uptrending support line for Bitcoin. And I think personally, and I think objectively speaking, we don't want to see this happen. No one wants to see this trend line break. Don't sit there and be like, oh, I hope to buy Bitcoin at 12K. If you're saying that you're misunderstanding this whole trend, you do not want to see this trend break. We don't know what's going to happen. If this trend breaks, we lose 13 years of consistent data that we've relied on, for the past many years to base our analysis of, predict our tops, predict our bottoms. We lose that. It's no longer valid. It's completely new. We're in new territory. So losing this uptrending support line we don't want that to happen. That is the worst thing that can happen. And I think if we see an 80% drop, that will actually occur. And that's another reason why I don't think we'll see that, is because the max drop we'll see is around 73%, bringing us down to this solid trend line. But yeah, if we do see an 80% drop, it brings us out of this uptrending support line, which is very bad for the market, and particularly bad for someone like me and Wolf, where we rely solely off technical data and market structures to predict things. So yeah.
Yeah, that's correct. I think people, like a lot of people would say that, oh, I wish Bitcoin would just bottom out right now and just go up. It's like, well, if it does that, it's invalidating a 13-year long trend, like not only by, what you just talked about, but also by the 4-year cycle. We're not meant to bottom out. We're not meant to bottom out right now. So, you'd say on paper, short term, that'd be good for you because you'd make money. But like, what about all of the data we've accumulated over the last 13 years that acts as, basically predictability in the future that can help us out in the future? We don't want these trends to be invalidated. The 4-year cycle, is one of the best things that can happen to us, because it means that every 4 years at this point, we can basically say, all right, I'm going to make a bunch of money in that year, right? It's like, why would you want that to go away? Because then you're just guessing based on no data. If you validate every single trend, you've got no data, you're just guessing, right? So trends are very important to maintain, and you should never be wanting a trend to break, right? Unless it's going to make you, money in short term, unless it's a short-term trend, but something like the 4-year cycle or a 13-year trend, like you just brought up in that logarithmic chart, you don't want that to break. You want it to maintain. But I think if that's it, are we done with the questions?
Yeah, I think we're done with the questions.
Sure. I do want to talk about, Crypto Academy. And if you disable screen sharing, we can bring it up here on my web browser, Crypto Academy. We've got a fresh website, so you guys can see there. Cool little design. But essentially, become a trader, 10-unit course made by both of us here over the course of this year. And we've recently just released it. Release date was May 16th, so it's brand new. It's fresh onto the market. And essentially take advantage of the bear market right now. As we said at the start of the video, we have boring consolidation regions like what we've seen in the last 2 weeks. Instead of doing nothing during that consolidation region, I know you guys have lives, but instead of doing nothing in the market during that consolidation region, go ahead, pick up the course, learn TA for yourself so you can do the analysis that myself and Whale do for yourself, right? The only way you can do that is if you learn TA, and this is the perfect opportunity to do that. We've got 10 units. They cover everything from market patterns, indicators, candlesticks, psychology, how to find trades, risk management, literally everything you can think of to do with cryptocurrency, not only to do with TA, but also to do with fundamentals as well, as in like what is Bitcoin, how does the financial market work. This course is kind of the equivalent of almost a university course here. So this is what we aimed to make it, right? Very professional and very unique in its own sense. We've got worksheets, we've got quizzes. No other course in the cryptocurrency space that I know of has that, right? We genuinely want this to be beneficial to you guys. And you can see by the effort we put into it, it definitely is. So there's our little bios here, and down the bottom of the web page, you can see the contact information. Go ahead and check an email to cryptoacademycourses@gmail.com for more information on the course and also the payment information if you're interested in making a payment. Furthermore, I know that both myself and Mega Whale are big fans of the Bitget exchange. We are in sponsorship with Bitget, and so this is a great opportunity to just collaboratively shout out Bitget. Lowest trading fees in the game, no KYC, doesn't matter where you're from, you can use that exchange. Obviously great for tax regions that I'm not going to mention on record here, but go ahead and check out Bitget. Multiple coins, dozens of coins that you can't find in any other exchanges as well. And we're both big fans of that exchange. I personally use Binance and Bitget to trade. And so go ahead and check that out. We've got our referral links, our relative referral links for Bitget Exchange in each of our videos. So if you want to sign up using Whale's referral link, go ahead and go to his video. He'll have it in the description, I assume, and I'll have the same thing. So without further ado, I think we'll end the video there.